All right. We're just about ready to start for my Q3 update. YouTube Live seems a little weird. I've only streamed before using Twitch. It's definitely not as good as Twitch, so next time I think I'll be using Twitch instead of YouTube. Okay, we've got a few people, so I'm gonna kick off. Right. So in this quarterly update, I'm going to talk about a few things. I'm going to talk about the quarter gone, the quarter that we're currently in, and I'll also share a little bit of information about myself. So I'll go full screen. I am on a lot of different social media channels, so a few of them are here if you would like to find me or interact with me. I'll be sharing this post. I think it's linked to in the YouTube video, so you can visit any of these if you'd like and connect with me. I love talking about stocks, so yeah, please send me any questions. We can have a quick chat about stocks, the market, macroeconomics, etc. Just some of the recent content that I've created that has had a lot of traffic. So these are the kinds of things. I've been writing a lot more blog posts on a blog called gettingrichslowly.org, and that content there is some overlap with what I post on eToro, but there is a lot of unique content too. Just a little bit of information about me. So I'm a South African. I immigrated to London in 2008. That's right about when the financial crisis hit. And in South Africa, there was news of it, but we didn't really feel it. So I arrived in London, very little money in my pocket, couldn't find a job, and I was broke pretty soon after that. I'm a software developer, or was a software developer at the time, and so I had some challenges finding a job, and eventually took a job in a technology stack called Salesforce. Some of you might know Salesforce, and I didn't really want to at the time, but I eventually really started loving it. I wrote the first book about Salesforce technology in the world. Won a few competitions, became fairly well known, and some investors approached me saying that they wanted to start a consulting business with me. So I did that in 2011-12, built that company to the largest of its kind in Europe by 2015, and sold that business to Accenture for an 8-figure sum in 2015. Worked for Accenture for 2 years, and now I'm starting another company. Well, we've been going for 2.5 years now, a company called SalesTrip, and I'm the CTO of that business. I've always invested in the markets, probably for the past 21 years. I think through the first 10 years I made a lot of mistakes. I lost a lot of money, but every time I made a mistake, I adjusted how I was working, made sure that I understood where my mistakes were and how I could avoid making those mistakes ever again in the future. And so for the past decade, I have been quite successful in my investment strategy. So long story short, 11 years ago, I was broke, had absolutely no money. Today, I'm in the top 1% wealthiest people in the world, maybe 0.1% wealthiest people in the world. I invest in eToro, as you've seen. I invest outside of eToro. I invest in startups. I invest in property and a few other areas. All right, so just in terms of these fact sheets, I think you will have seen some of the PIs publishing their fact sheets. So let me zoom into this one a little bit. So on the left-hand side is the May 2020 fact sheet. On the right is the September 2020 fact sheet. Now, September wasn't a good month for me. I did beat the S&P 500 by quite a lot. September was when we had the tech sell-off. But the most important point here is that between May and September, my lifetime return on eToro increased by 65%. Now, I don't have any copiers that have been copying me since my first month on eToro, but if anyone was, they would have seen that kind of benefit. So this is just trying to give you a feel for how powerful long-term returns can be if you stick with an investment. Just a bit of a summary of my portfolio performance. I haven't updated this today, so the numbers are actually a bit higher now, but the S&P 500 year-to-date return is probably about 5% now. My year-to-date return, I think, is about 28-29%. I try to beat the S&P 500 by at least 20% a year, so I'm on target to hit my... I've hit my lower target, and I'm going to try and stretch that now by another 10%. My trailing 12 months return, I think, is 43%. Annualized return is roughly the same, 35% per year. And my lifetime return on eToro it's higher than that, but let's say 451%. By the way, if anyone wants to send me any questions or comments, you can ask me in the live chat, and I'll try to get to those questions at the end of the presentation. All right, so what does this mean? So my goal for my copiers and myself, I want to beat the S&P 500 by 20% at least per annum. The S&P 500 over the past 60 years or so has given a return of about 10%. So this means that I want to try achieve a 30% return per annum. This is an ambitious goal. There are very few people that have been able to do this over a multi-decade period. But I think I could do it. And just an example of the kinds of returns you can expect when I do achieve this goal. Over a 10-year period, this would turn $100,000 into 1.3 million. And over 20 years, it would turn that same amount into 19 million. Compound interest is a fantastic thing. So I plan to make a hell of a lot of money in eToro, and obviously for my copiers too. All right, so in terms of market analysis, so this is every quarter I kind of do a plan. I do a few things, but at the beginning of the quarter I have a plan, and I think about the things that might affect the stock market through that quarter. Now, I can't know everything because new things come up as the quarter goes on, but this was my view for the quarter that's already gone. So that's not for the current quarter, it's for the quarter that's gone. So these are some of the things that I thought would affect the market for the quarter gone. And I like to develop a view that the bull view and the bear view, because you need to have a balanced view across the market as well as anything that you invest in. Otherwise, you end up investing based on faith, which is never a good idea. So I'm not going to read these, but if you have a read of them, you will see that a few of them came to pass and a few of them hadn't happened, which is the way I expect it to go. But I use these to try and determine my medium-term, short-term strategy for the quarter that's coming up. All right, so now for the current quarter, what do I think is going to affect us now and for, let's say, the next 2 months? By the way, I'm jumping in and out of full screen view because I'm on one screen. I hope it's not too annoying, but you should be able to read it no matter what. So I think that on the bull side, the bulls will be pounding these messages. The lockdowns are going to continue to favor the lockdown winners before. Amazon, Facebook, Shopify, all of the work from home stocks, the retailers, ASOS, etc. The Santa Rally is coming. So I don't know how many of you know about the Santa Rally, but going into the last quarter of the year, as we approach Christmas and Amazon Prime Day and Black Friday and all these big sales events, a lot more money is pushed into retailers, driving, and investors expect that, so the stocks go higher. The US is likely to issue new stimulus. I wrote this about a week ago, but it's looking more and more likely that a large amount of stimulus is going to hit the US. We've had a decent consolidation through September. We saw tech stocks and the S&P 500 a little bit consolidate, and this makes investors more comfortable about being bullish. If the markets are only going up and up and up, new investors might be very excited by that, but seasoned investors, the experienced ones, will start becoming quite fearful because they know that a consolidation is coming. So when it's happened, and so they feel a bit better about the future. A lot of the weak hands have been shaken out of the market. This is a saying, and it effectively means the people that are new to the market, they've had a bad experience and now they've left the market. So there's less likely to be any crazy movements driven by novices. A vaccine is a few months away. We'll see, but the bears will say this. The first half of next year will probably see a recovery in the stocks that didn't do well through the lockdown. So travel and hospitality, if a vaccine arrives, they definitely would see a decent recovery. The money would pour into them. Parts of the economy are already are fully recovered. So if you look at consumer confidence numbers and retail numbers across the US and I think the UK, these are actually doing better than they were pre-lockdown. And the US election. The US election is both in the bear and the bull view, because depending on your outlook, you could probably justify it either way. All right, so those are all the messages that the bulls might be pounding on. But what are the bears going to say through the next quarter? The market lost its bullish momentum. So that shakeout in September, it slowed things down. It took the momentum out of the market. And momentum can be very important as one of the attributes to determining how to invest. Despite the consolidation, valuations in tech are extremely high. And this is a bit of a lumpy picture. Some of them are a little bit higher. So Facebook is a little bit high. Google is a little bit high. But there are others like Shopify that are just, and Zoom, that are just outrageously high, even if you forecast the best possible scenario for their growth through the next 10 years. US stimulus hasn't been agreed yet. It hasn't really happened. So could there be a breakdown? There could be more lockdowns. We're in the second wave. There could be third, fourth, fifth waves. The protracted lockdown is going to destroy certain industries. So we're seeing this in the UK, the US, other places. Healthy businesses keep some cash in reserve to ride out the bad times, but there's only so long that cash will last. And then the governments can help you out, but there's only so much money that the governments are going to be able to give you to help you out. So if the lockdowns are for long enough, those businesses are in trouble. So travel, hospitality, they could be in trouble. Smaller businesses tend to be very light on cash. So they rely on very quick turnover in business. So if they don't have cash, they don't have that money to survive. So there's a danger that through a protracted lockdown, smaller businesses could be destroyed. Major unemployment looks to continue. So not only has it happened through the massive spike in Q1, Q2 of this year, but it looks as though, partially because of point number 5, that unemployment is going to continue to grow. Inflation is coming. So you may have seen headlines around this, but it hasn't really come to the forefront just yet. As a consequence of creating lots of money and issuing lots of debt, inflation is almost always a natural consequence. Inflation makes everyone poorer by making reducing the power of the money that they owe, the pricing power. The recovery has favored the wealthy. So I don't know how many of you are following the stats, but and I'm going to publish something on eToro in the next day or two. But the wealthy, the people that can work from home, the software developers, the finance people, they're actually okay. Some of them might have been laid off, but their wealth hasn't been impacted as much as the waitresses, the hairdressers, the builders, the people that need to go to a physical place to do something. And because of all the fear, those people can't always attend those places to work, or because their businesses have shut down. And so it's terrible, and it's unknown what long-term impact this is going to have on the economy as a whole. And the US election could be a bad thing too. So all right, so this is me attempting to uncover a balanced view of the markets for now and for the next couple months, and to decide the paradigm in which I'm going to trade my stocks, and that will determine how I trade and what I trade. Okay, so now in terms of my forecast and plan. So this is a very colorful slide. The items in green were part of my plan last quarter, and they will continue to be part of my plan because I believe they still hold. For example, I think that there will be a broad market recovery through 2021, not just in tech. The ones that I've crossed out are those that they've come to pass or I no longer believe them to be true, so they're not a part of my plan. And then the items in blue, those are the things that I have added to my plan for the current quarter. So I just mentioned that tech valuations are still very high, but I believe that a Santa rally and also sentiment could carry those much higher. Stocks can stay overvalued for a long time. I think that Trump is likely to pump the market, and we've seen some evidence of this. He made a very contradictory set of tweets a few days ago saying that he wasn't going to issue stimulus, and then completely changed his mind. So that's one of the things that he has strong messaging around, so he will try to keep that message as true as possible. Post-election will be interesting. So I think that there could be a shock to the market depending on the result, who becomes the president in the US. I think medium and long term it probably won't matter, except maybe for Chinese stocks. So if Biden were to win and Chinese stocks came back into favor, I think a lot of them would pump because they are much cheaper than their Western equivalents. So for example, the likes of Baidu, it's trading at a relatively low multiple. Need to keep an eye on the COVID situation. So if there's any major change to infection and death rates in a large portion of the world, or more lockdowns or more aggressive lockdowns, or a vaccine is found, all of these things can affect how we will be trading through the next quarter or so. And inflation is coming. It's going to change the landscape quite a lot. When inflation arrives, the dollar will be worth less. That might drive stocks up initially. It can change import exports for particular countries, which are a large part of some countries' GDPs. It can make the price of gold cheaper, so more people buy gold. I don't think we're going to hit major inflation for a while. It takes a while for inflation to build up and have a material impact, but when it does, that means that it changes the price of things that we might trade by making currencies cheaper. But also it means that rate changes are likely. So if inflation increases too much, we'll see central banks increasing their base rates to try and offset inflation. And when that happens, that changes how much people borrow, and there's a long chain of things that happen as a consequence, and it can drive the market quite sharply. All right. So next up, questions. So before I answer any questions, I did want to talk about a few of the stocks that I'm finding quite interesting at the moment. If you have any others, please pop them into the chat, and if I have an opinion, I'll try to share it quite quickly. I don't know all the stocks in the world, but if I know a particular stock, I'm happy to talk about it. All right, so the first one that I'd like to talk about is if I spell it correctly, Invitea. This is a very interesting company, and I think there's a class of businesses that are going to emerge over the next 5 to 10 years. So they're companies that they do a suite of things. They handle things like genetic testing, but they also, some of them also offer services, gene editing services. So companies that are looking to try and change the way that your genetics work. And quite often this is targeted towards diseases. So which company was it? Novartis. For the past few years, they've had a gene editing treatment for child leukemia. And the success rate of this has been something like, I can't remember exactly, I think it's 80% of children that go through this treatment are cured of leukemia. It's incredible. And so companies like Invitea, and there are a few others, they work in the testing department, but also some of them in trying to fix you using CRISPR and other gene editing methods. Somewhere in this class of businesses, in this group of businesses, is the next Amazon, is the next Google, is the next Facebook. The mega cap companies, one or more of these businesses are going to win and become mega caps over the next 5-10 years. So it's a very, very interesting space. And this company is spectacular. They're a little bit risky because the companies are capital intensive. You need a lot of money to do the kind of research that they do. But as you can see, had a bit of a bumpy ride for a few years. But through this year, they've really started to take off. I expect it to continue to be volatile, by the way. All right. So the next one is, and I never know how to pronounce this, Qdian, which I think might be Shudian. This is a company, this is probably the highest risk stock I have in my portfolio. It's a micro lending business in China. They were doing very well until China changed the legislation around lending requirements. This impacted how many people they could lend to, the processes they had to change. And so they've had to adapt their business, and they've started diversifying the types of things they do. So you can see the stock has fallen a hell of a lot. It's higher risk because they haven't been able to turn their business around for a while. They do have a decent amount of cash, although it's very hard to find information about some Chinese companies, this one included. There is a chance that there's some fraud going on. And so there are little whisperings of rumor, not on any official channels, but there are whisperings and rumors that people at the top might be a little corrupt. So I'm keeping my position here small. If their books are correct, their market cap, so the total valuable stocks outstanding, is much lower than the amount of money they're making, first of all. And I think I don't know their book value on here. So even if the business went belly up, they closed the business entirely, the amount of money that they would get from selling off everything they have would exceed the share price at the moment. And I think my calculation is if the company went completely bust, you would make double your money. But that's only if the books are not cooked. All right. And so other stocks, Apple, interesting because I think it is incredibly expensive at the moment. I haven't put out a very detailed post on this, but if you look at Apple's fundamentals, they are trading at multiples of their revenue and profit never seen before. So look at this bottom chart. This is the most interesting one. They're not growing their revenue as much as they were 5 years ago. Their growth has slowed down a lot, and revenue as well as profit. And despite these things going down and becoming nearly zero, their share price has doubled in the past year. And so it becomes that's the wrong one, but it becomes very difficult to justify a doubling of a share price in 1 year when the underlying fundamentals have nowhere near doubled. Maybe they've picked up 10%. I love Apple as a business, and I obviously am invested in Apple, but I will not buy these prices. I'm really keen to watch for a drop. It's going to be interesting to see what happens when they report earnings at the end of this month, because I want to buy more, but definitely not at these prices. All right, let's take a look at some of the questions. What do I gain from people copying my investments? So I make between 1.5 and 2% of the total money that copies me as commission from eToro. So my copiers don't pay me anything, but for example, I jump into this page. I'm currently managing $7.121 million in AUM, and that means that over a 12-month period, I will make 1.5 to 2% of that amount over those 12 months. All the best. What do you think of inflation, and how does it go about impacting gains? It depends on the level of inflation. So inflation now is low. It actually needs to pick up to be healthy. I wrote an article about inflation. I don't think we need to act on inflation just yet. But if rates start going up, then if the core rates of the Bank of England and the Federal Bank and the US Federal Reserve start raising their interest rates, then there's going to be a lot less credit to go around. If there's less credit to go around, there's less growth. And that'll just slow the growth of everything right the hell down. Usually money moves from growth stocks to value stocks. So growth stocks being the tech stocks, the stocks that grow fast, and the value stocks being those stocks that they don't grow as fast, but they grow in a steady way. So banking stocks, for example, could benefit quite nicely. Consumer goods companies like Unilever could benefit quite nicely if inflation increases and there's an adjustment in the central rates. Have you tried MetaTrade platform? I have not. I see there are 3 stocks that you have lost more than 30% of the initial value: NatWest, Dropbox, and EasyJet. Are you going to continue holding them? So good question. So Dropbox, I'm becoming less sure of as time goes on. I think that their core product offering there's a good chance it's going to be destroyed. Microsoft offers something similar to what Dropbox offers, and Google offers something similar to what Dropbox offers. Both of their products are cheaper than Dropbox's and integrated into a whole other suite of products. So Dropbox is the one that I doubt. I think I might drop that one. EasyJet has a lot of cash to survive a downturn. I like EasyJet because it's kind of a domestic, in Europe at least, airline. So if the lockdown does ease up like it did earlier, it would probably be the local market where it would ease up first. EasyJet is a well-run company, and even at the point where I invested in, I'm down 30% now, but I would expect an uplift of at least 200% from the point that I bought. That does depend on how long the lockdowns are and how the recovery goes, so I need to monitor that one. But I think I might start loading up on more EasyJet, actually, when towards the end of this year, beginning of next year. NatWest is an interesting one. I think I did put out a post some time ago. NatWest is one of those businesses that they're just so dirt cheap that I don't understand why they're that cheap. NatWest is holding so much cash that if NatWest were to go under, just their cash would mean that for every stock you hold, you would make 250% from where it is right now. So NatWest, I will still continue to hold even though I have lost that amount. I would say as a small copier, so I advise against people manually changing positions in the portfolio, because the portfolio for me is a tool and the parts in it all need to be there for the tool to work properly. So not all of our positions will always be green. Some will go red. We don't need them to all be green, but they're all part of a strategy and they collectively form a strategy. As soon as you start tinkering with positions and closing them, you start affecting the strategy. Would you consider a bet in recovering in oil companies? I don't know. It seems very risky given how quickly renewable energy is becoming cheaper. So I think it was in 2010 we'd forecast, humanity had forecast that renewable energy would be at a certain price point at 2020. We reached that price point in 2015. Renewable energy is becoming cheap so fast that we can't even forecast it. And oil companies, they're trying to pivot into renewables, but they just make so much money from oil that it's hard for them to pivot because they would need to leave their moneymaker alone whilst they build up these other industries. So for now, I'm going to stay clear of oil businesses. How long do I intend to keep on eToro? So at least until I have made $1 million on eToro. So at the moment, I'm far away from that. I think I've hit $50,000. I do want to bump that up by maybe 20% in the next 2 months, so up to $60,000. But I would think it would take me about 5 to 7 years, depending on how the market is, to turn my 60,000 into $1 million. So let's say at least 5 to 7 years. Why are you interested in Chinese stock that might have a chance of fraud? So the reason is it isn't certain that there is fraud. And if you look at the books, by the way, there are fundamental numbers you can look at when reading earnings reports. And you can make calculations to determine the risk of manipulations in those earning reports. There are very clever economists that have done that. Looking at the books, it doesn't seem that they are manipulating their earnings. This is just a rumor that I read late last year. The reason I'm invested in the company is because even looking at their books and the market cap of the company, they are massively undervalued. All it would take is one semi-good quarter, and I believe that their stock price could double. So I do have a few things in the portfolio that are high risk. I keep them to a very small number because I don't want to have everything be high risk. And this is one of the stocks that are high risk. I like their business model. Their management is good. They had a really good, strong business before the Chinese legislation changed. So we'll see. How much money would you recommend? I recommend you put in my copy. So in order for the copy to work the way it's supposed to, because eToro has some rules about how much you copy a person with, I think you might need to invest at least $290, maybe $300. But I do have copiers that are copying me with hundreds of thousands of dollars. Could you make a list of what information needs to be checked before investing in any stock and from where you get the information? I have actually done something like this before. When I research a stock, I look at a hell of a lot of things. And I go, there are phases of my research. So there's the top level research where I decide which stocks to dig into more. And if you watch this video, I talk about some of the tools and approaches I use to discover stocks that have good potential in the near future. You won't see the detailed version of my process here because, to be honest, it takes days and days to analyze a stock in depth to determine whether it's worth investing in. Next question. Yeah, how long do you want to continue trading? At least 5 to 7 years on eToro. I don't know if you can tell, I love economics and I love the stock market. So I will continue trading for the rest of my life, if I can. Adian, sorry, I don't know the stock. I currently copy several traders. Would it make sense to invest all in one or stick with multiple? I would probably go for multiple, just so that you diversify. If you can find investors that have different strategies and invest in different assets, and then put different amounts of money in them, that's a good strategy for balancing your risk. All right, and so we've been going for nearly 35 minutes, so I'm going to start closing it down. Thoughts on Micron? Is there scope for you to buy it? I'm kicking myself a little bit because when Micron dropped, was it 2 weeks ago, I had my finger on the button because Micron is only going to do well through a locked down world, because a locked down world spends a lot more time on computers, and computers need chips that Micron makes. So I expect them to continue growing quite nicely. The knock that Micron took is because one of their biggest customers, Huawei, they're not selling to them anymore. And Huawei is something like 13% of their revenue. They're going to have to plug that 13% gap. And they expect that gap to be reflected in the next earnings. So I think a long term, if you're going to hold something for long term in Micron, you're probably going to do quite well. Wesl3y, if it's not too personal, can you tell us your current portfolio size? It's 60K. If I'm not mistaken, I believe the eToro CEO also copies you. Yes, so Yoni does copy me, and I think he's copied me for a few years. My eToro portfolio is about $50,000. My off-platform investment is much bigger, much bigger. I have a lot of money in passive funds off of eToro, and actually I'm very unhappy about that because my eToro returns are significantly better than my returns outside of eToro. So I would like to increase my portfolio size in eToro by several 100% at least, but I won't do that because that would be terrible for my copiers. But I might increase it by a little bit more in the next couple months. What app would you recommend for stock analysis? Unfortunately, there's no one single app that you can use for stock analysis. I find Seeking Alpha is really good. It's got people doing the analysis for you, and it's got a really good set of stats. But the thing that it's missing is trend analysis. So it's good to know, for example, how much revenue a company is making this year, but it's pretty good to have the amount of profit they've made over the past 10 years, and then, you know, compare that to the stock price and maybe the revenue and the margins, so that you've got a picture of the direction that they've gone in with all those variables considered. And there aren't many sites that you can do the second with, unfortunately. So I tend to use a few things. What's my analysis of the current bull run for the NASDAQ? I was actually going to post this morning, but I was trying to figure out how to live stream on YouTube instead. A lot of people say the NASDAQ is in a bubble. I think some of the tech stocks are definitely looking a bit frothy, but there are a lot of stocks that have a lot more room for growth. And if you look at consumer behavior across some of the biggest markets in the Northern Hemisphere, for the past year, people are actually spending a lot of money. They've just changed where they're spending their money. So it's weird. The recovery hasn't been even, and it's definitely favored certain sectors, but the amount of money that consumers are putting into the money is growing, and has, in some areas, like I said earlier, has reached higher levels than in Jan. But there definitely are businesses. There are businesses that are in trouble. So in terms of the NASDAQ, I think in general the NASDAQ is a touch higher, but not crazy high. I don't think we're anywhere near a massive bubble bursting. Some stocks, however, need decent consolidation. Zoom, Apple, and a few others. Thanks for your effort, Wes. Do you think the stock market will slow down after the election in the USA? I don't know. Maybe temporarily. It depends on the stimulus situation globally. But I think that next year we will see, if we find a vaccine or we find some other way to deal with COVID, there are lots of stocks that still need to recover. The finance sector, hospitality sector, travel sector, they're all a half to a third of the value that they were pre-lockdown. So I foresee at some point when the situation for those sectors starts looking good, money is going to leave tech in a big way and pour into those sectors. I don't know when that will happen. No one knows when that'll happen. But I don't think the bull run in general will break down. I just think that money will be reallocated. All right. So we're going for 40 minutes, and I am going to call it a day. If you have any other questions, please message me on eToro. I've shared the deck that I walked through on the description of the video. Inside of this deck, there are a few ways that you can talk to me directly. I encourage you to do that. All right, and I will do this every quarter. So thanks for your time. Happy trading, and talk to you soon.